All right, so running through this channel, this is our great mentor channel, ICT. Of course, there are a lot of resources here that can make you profitable. A lot. We have over 755 videos. If I click on the popular ones, these are the ones we watched. You can see these are the ones we watched back then. A lot, millions of views, millions of views. And if you have not seen any of these videos after watching this one, okay, you can just come here, study more, make reference to. Just click on the popular section of this video, then watch. Majorly this 2022 mentorship. All right, there are a lot of videos here, but my duty today is to help you guys simplify things. Straight to the point, and then you start making money as quick as possible. Now, what I'm going to do, I'm not just going to teach you guys all of this concept, all right, but how to apply them, all right, because you can have knowledge of every one of these and yet still be confused in terms of making decision in the market. Now, remember one thing, this simple rule is what keeps us going in this trading, all right. What we do here on the chart is to help us make decision. Okay, perfect, just to make decision. And what are those decisions? To click this buy button or click this sell button. So despite all the techniques, for example, now like as I came here, we have over 700 videos, 755 videos, but everything we are doing is just to help us make decision. Click this buy or click this here. So irrespective of the strategy, irrespective of the techniques, irrespective of the concept, we are just after one goal, make decision. All right. Now, what I'm going to do, simplify this concept and then show you guys how to make use of it in making decision. I'm going to start with the first one here, liquidity. All right. But before I start with liquidity, there is something that is more important than everything you guys are seeing here. Okay. And that is market structure. Market structure is the most important when it comes to smart money or whatever thing you are doing. Market structure is the most important because in this market structure, there are two things that are here. First, direction of the market. That is if you know how to use market structure for direction. Then two, entry. So this is the only concept. Market structure is the only concept I know, obviously, that carries these two things, direction and entry. Every other concept that are here, they just have one goal. They are just built under one thing, which is entry. So most of all these things are used for entry. Order block, breaker block, inducement, optimal trade entry. Most of them are used for entry. So market structure has just two things, direction and entry. Now remember, my goal in this video is to simplify things for you guys, make it easier for you guys to make decision. Okay, now we are starting with market structure because with the knowledge of market structure, everything else is going to be easy. Now, I know most of you guys know about market structure, how to make use of market structure. Just follow me up. Let me show you guys the most important part of market structure. The most important part of market structure, why we need market structure, is the unit of market structure, which is the simplest unit. And that is this image you guys are seeing right here, okay? Either this form like this or this pattern like this. I know most of you guys have seen it in the past. This is what we call external range, and then this is what we call internal range. Every market structure you will see in the market, at the end of the market structure, you will either see either this impulse like this or this impulse with retracement. That's the only state of market structure you will see, because the most important part of market structure is not all about the structure. No. The most important part is the last part of the market structure, which is the most recent price action. So for this case, this bullish structure, this is the most important part, okay? This place from here going forward. That means the rest information we can disregard it. Remember, I told you guys I'm going to walk you guys through every of this concept, make things easier for you. But we are first starting with market structure. Now, for things to be easy for you as a trader that trades market structure, follow me as I walk you through this part, this easy part. So for you to maximize market structure, we pay attention to the most recent price action. And it can be either this pattern like this, which is this one I just showed you guys here, or something like this. Let's take a look at example of a structure like that. So like this, like this, like this, like this, and then like this. So this is the most important part. So if I take my vertical line, I place it here, you observe that, okay, this is the part I am interested in, which is this one I showed you guys. So this is the most simplest unit we need a market structure. Now, when we want to interpret this data, like what do we do with it? Why do we need it? Remember, I told you guys, I'm here to make things easy for you. So there are two things that are here. First is the direction. And then the second part is the entry time. Now, if you take a look at this information here, all right, it has already showed you the direction. What is the direction? Bullish. So anytime you see an impulse like this from here to here, the direction is bullish. The opposite is the same. Anytime you see an impulse like this, the direction is bearish, just like what we have here. As we have all this example of market structure, bullish market structure, that is the same way we can have example for bearish market structure. So if I had drawn a bearish market structure, the most important part I am interested is either this unit like this is the internal range, then this is the external range. So no matter how the structure looks like, the only part I'm interested in is the most recent price action. This is what I'm going to work with, and that is this image you guys are seeing here. Now, how do we make use of it? First of all, I told you guys market structure give us two things. First, direction, and then entry. I hope you guys still remember what I said when I started. I said market structure helps us with two important things. First, direction, then entry. Okay. Now let's interpret those two data with this information we have here. So for now, let me work with bullish scenario, but the same thing for bullish and bearish. So whenever a structure ends either in positive like this or like this, the direction is just one side, which is bullish. So whether it closed like this is the most recent price action, which is this one here, or it closed like this, something like this, which is this one here, the direction is bullish. So that has settled the aspect of direction. The next thing is entry, because two things is what we do in this industry: direction and entry. Most importantly, exit is exit doesn't take more percentage when it compared to the activities we do on the chart. The most important ones are direction and entry. So we are done with direction. What about entry? Now at this point you need to pay more attention, because entry is very, very broad and dynamic. Most of the strategies you see online, most of them, they dwell on the area of entry. Entry is very, very dynamic, and this is how I teach my mentorship students. This is how I impart it on them. First of all, I understand you guys already know direction. Okay, so direction means bullish here when you see this shape like this. So we understand at this point the direction is bullish. Now when it comes to entry, this is the part most traders struggle with. Okay, when it comes to entry, remember I told you guys, every structure we close either externally like this or internally, either bullish or bearish. What you do as a wise trader, you don't engage the market when it closes externally like this, unless the market closes internally, which means before you press the buy button, all right, because at this point we are dealing with bullish scenario. Okay, before you press that button, the only condition is that this market has traded internally. Any time frame you are dealing with, because we can combine this knowledge to perform top-down analysis, but let's work with just one time frame, because the way to work on dailies is the way to work on 4 hour, on 1 hour, on any time frame. So we should be looking for engagement only when price is internally like this. Now, how do we engage? Because as price is coming lower like this, there must be a particular point where we will engage. That is where every of these whole concepts start coming in. You see how easy it is? That's why I said, let us start with market structure. Because without market structure, if I start explaining fair value gap, it will look like obvious things some of you are not going to understand. Even though you know what it means, the explanation, but the application. One of the important of this video is application, how to make use of them. Because when dealing with fair value gap here, other block, any other concept that is here, you need to understand these two things here. All right, direction and entry, because there are sometimes the direction of the market may be bullish, or let me work with something like this. The direction of the market is bullish, and then you are seeing an entry opportunity that looks like bearish here. So this may be a fair value gap to set to the downside, not knowing that obviously the whole direction like this is bullish, so the market can just from there keep pushing to the upside. That's why you need to understand about direction, and this market structure has dealt with that. All right, this market structure has helped us to understand it. Now let us start with this entry opportunity. So the first thing I will start with is fair value gap. All right, fair value gap, then I'll talk about other block, then I'll talk about breaker block. But my joy at this point is that so many things are now becoming clearer to you guys, how to apply them in real life. So let's talk about fair value gap. What is fair value gap and how to use it? It's very, very easy. First of all, I'm going to start with how to use it. Remember, we are interested to engage when price is only coming back into the range, right? So when price is coming back into the range, all we need to do is to look back to our left hand side, this impulse here, okay, this move, which is eventually something like this. Look for the fair value gap at this point. That is where we are going to press the buy button at this point. All right, that is how it works. That's how fair value gap work. Look for the fair value gap from here to here. How does fair value gap work? Fair value gap are level of imbalance in the market. For example, you can take a look at this. After this candle has expanded to the upside, the bearish candle ended somewhere here. Okay, that is where the bearish moves ended, somewhere here. Now all this move from here to here are bullish. So the market needed to come back again to sell rebalance at least some part of this move. It could be this one candle, it could be this two candle, because all here are bullish. When the market is balanced, this market is after a condition where everything is balanced, meaning equal buyers, equal sellers. So if buyers are more than sellers, the market will be, imbalanced. That is why we need that knowledge of fair value gap, so that when price return back to rebalance it, then we can use it as our entry opportunity. Like this candle now that traded back into this place is trading back into this fair value gap because this is an imbalance. That is the knowledge of fair value gap. We have more examples. For example, this is all bullish move. The bearish moves ended somewhere here. So the market need to come back to rebalance it, and that is why you saw this. They came back, they tap it, and then rebalance it and push to the upside. That is for fair value gap. Next is order block. Very easy, just like the same thing as fair value gap. Order blocks means the last down candle before the up move. We have been talking about bullish movement right here, right? So the last down candle here, because when this market is coming lower like this retracement, there will be a down candle here before all of this bullish movement. So this last bearish candle before the move is the order block, and this is not the only condition of order block. We can also have order block inside of this impulse swing. For example, any black candle here can be order block. So once there's a move, an impulse to the upside, like bullish move, the opposite candles are order block. Let's take a look at example. You see, just like that example I give you guys, this is another block, but we also use it as a fair value gap, because this could also be the fair value gap, but this other block is the perfect, where price came back to. Like as I said, this is the impulse move. All right, all these green candles are the impulse move. So every opposite candles here will be other block. This is another block, this is another block, this is another block, and all these ones are other block. Now what we do, remember I told you guys, we use them for entry. So we are waiting for price may come back to this fair value gap now, and don't make use of it, and then use this other block. So either price you use fair value gap or other block, that is where we're going to use for our entry. Okay, next let's talk about breaker block. Breaker block is very easy. How do we work with breaker block? Remember I told you guys about order block. What is order block? The last down candle low. As this market is pushing lower like this, there's a down candle here before this up move. Okay, now this last down candle here, let me draw it out. So this last down candle here, this last bearish candle here is the bullish order block. Okay, this is the bullish order block. So we are expected to take our entry the moment the market came back, or the moment the market come back to this bullish order block. But there are some conditions in the market whereby the market want to change direction and then break this level here to the downside. At this moment, this is no longer a bullish order block, okay? But this will now become, a breaker block. Why is it a breaker block? Because there is a break market structure to the downside, meaning a start of a new directional trend. This could be the start of the bearish trend, okay? Now, how do you engage it? All we need, price come back to retest the breaker block here, and then that's going to be our entry. I hope it's making sense to most of you guys, because this is how to simplify things and make it easy. Okay, now the next thing we're going to talk about, because I'm going to run through all of them and make life easy for you guys. Displacement. All right, now displacement is very easy. What is displacement? Displacement means an aggressive impulsive movement in price, something like this. So how do we capitalize on it? How do we utilize it? First of all, we don't use it for anything significant. All we just need to do is to make sure we have already have our entry before this displacement. What I'm talking about is, first of all, make sure you have, for example, I'm teaching you guys different entry techniques, right? Either fair value gap or break or order block. So this could be a displacement. That's why I said before these displacements take place, make sure you already have your entry either at this order block or at this fair value gap. That is the simplest explanation of displacement. You don't need so much about it. All you need is your entry. Remember I told you guys, this analysis we do on the chart is broken down into two things: direction and entry. Okay, so displacement can be capitalized under the category of direction, because market just expanded and then there must be a particular direction it expanded to. For this case, it's going bullish. Inducement. All right, now this part, I want you guys to pay up attention, because so many people, they misunderstand this a lot. They take it to be so much a big deal. Inducement is not a big deal. All right, some people want to, if they don't see inducement in the market, that means their strategy is not powerful, so they want to build their strategy towards inducement. Inducement is not that a big deal. What is an inducement? Inducement can also be called something like ICT turtle soup, because this is how it operates. Price will seek a level of liquidity. price will come up here, seek this liquidity here. That's why I wasn't, ready to explain liquidity yet, because I wanted to first of all be through with entry so that you guys understand. All right. But this is just how inducement work, okay? Price will take out a high and then use it to deceive some people and then fall to the downside. So this is inducement because the market didn't go in the original direction and so many people are chasing it to the upside. Now, there are some people that have built their strategy towards inducement because at this point, they are looking at another PD arrays. PD array means all this stuff I've been explaining, other block, fair value gap. So there is something here that they are using it as their entry point. All right. I don't want you guys know personally, I don't trade inducement. That's why I'm not paying so much attention to it. But to make things easy for you, this is how to simplify inducement. I hope you guys remember my explanation on that, market structure unit, like internal range and external range. So this could just be an internal range on this, maybe any time frame, maybe daily time frame or 4-hour time frame. Then when price is going back into the range, remember I told you guys, you only trade when price is going back into the range like this. So on this time frame, this is the normal move, all right? This is normal move going to the range. But if you go to lower time frame, all right, you can see this inducement on lower time frame, maybe on 1-hour time frame or 15 minutes time frame. How do I know that you see inducement? As price is going up on higher time frame like daily, on lower time frame, you will be getting minus market structures here, market structures, something like this. That is how that you can see the point of inducement because it came back, created a liquidity there and then come to this point. That's why if you are trading on lower time frame, you still have to look at higher time frame to know what higher time frame is going to do. All right. So that is just more about inducement. It's not that a big deal. Optimal trade entry. I love this one a lot. Let's talk about optimal trade entry. Now remember this explanation. Okay. Let me take off all this and then let me come back to make things easy for you guys. Remember all of this I've been talking about. Remember I told you guys you need to wait for price to come internally like this before you can look for your entry. Now, there are areas where entry is easy. For example, as price is coming lower like this, we need price to go, to the discount level. We need price to go to the discount level because the more the discount, then the higher probability the setup will be. Now, this is what I'm talking about. So whenever price is coming lower like this, what you first need to do is take up your Fibonacci retracement like this, draw it from this low to this high. Now, for you to have efficiency in your entry, and like that's why I say we need more discount. We need price to come below the 50% level. This 0.5 means 50%. So all the fair value gap you are seeing here will be high probability. The other block will be high probability. This is optimal trade entry. If not, because obviously I told you guys all the black candles here, all the bearish candles here, they are other block. There could be other block here at this from this 50% upward, and most people are going to use it for their entry. And the market may even deceive them, out as if you want to push to the upside and then came lower and then come back lower again. So we have to be wise. Make sure before you take your entry, it has to be optimal, meaning price come back below 50%. That is the meaning of optimal trade entry. Very, very easy. Now, the next thing, power of three, right? Power of three is one of the most popular concepts when it comes to ICT concept, okay? Now, let's talk about power of three. Power of three has to do with working with time of the day. All right, I've done a lot of video with ICT power of three. How does it work? This is usually the daily candle. Okay, the daily candle will open, right? Let's say it's a bullish day. If it's a bullish day, they will first of all deceive people by trading to the downside. All right, as this market is trading to the downside, it is creating ICT power of three because if you get to a point, then it will expand to the upside like this. And then at this point, so many people have lost money because when it was trading to the downside like this, so many people were chasing it. Now price has pushed to the upside. They have no idea. Some of them are going to chase it anyway, but this is ICT power of three. Why is it ICT power of three? Because we are working with the low of the day, all right? We are working with the opening of the day, all right? And then we are working with the close of the day. This is the ICT power of three. Low, open, close. That is what makes up ICT power of three. Now, this illustration has lower time frame illustration as well, because at this point where the market open, it will first of all consolidate during the Asia session, okay? When it is as it's consolidating during the Asia session, then this move that went lower is this one you are seeing here on lower time frame. It will wipe out all the liquidity here and then push to the upside. Are you guys getting this point very well? So this is ICT power of three. ICT power of three because it has formed a Judas swing to the downside. This is ICT power of three. How to make use of it for your entry. Now, the next one we're going to talk about is key zone. Remember, I've not talked about liquidity, all right? Remember, I've not talked about liquidity. So let me use this opportunity to talk about liquidity. Liquidity is very simple. Every high in the market, every low in the market are levels of liquidity. Whether single high like this or double high like this, for example, something like this. Now, it must not necessarily be on the same level. It could be something like this. That's why we call it relative equal high, meaning it's not on the same level. All of them are level of liquidity because there are others resting above them. What do I mean by there are others? There are some people that trade, their strategy is based, when price break a particular level. Let me explain it proper so that you guys understand. There are some retail traders that, when price break, for example, this is a low, right? They believe that for them to have a successful sale in the market, price must show willingness by breaking this low. So they place their set stop here so that in case the market push lower, they will be on profit. Now, I'm not explaining this to you guys to criticize this strategy. This strategy can be this strategy is one of the best trading strategy, placing a set stop. Now, because obviously these days now, because of SMC, the whole mindset of people, they criticize some things that have been existing in the past. Because placing a set stop still work, but you just have to know how to do it correctly. Because there are some times after placing this set stop like this, the market will come back, take out this liquidity, and then push to the upside. Now, all these SMC gurus, they will criticize retail traders that do all that because at this point, the market has obeyed them. But look what I'm going to tell you guys, this strategy work. This strategy work. Now, I'm not telling you guys it work because I still make use of it today. Now, let me explain something to you guys. Now, one of the issues with some of all these our traders in the past is understanding of direction of the market. That is one of the issues, okay? Because somebody that places a set stop now at this point and then the market expand to the upside, obviously they don't know the direction of the market for that day or for that week. That is the only condition whereby you place a set stop, the market take out your liquidity and reverse. So don't criticize them. Of course, everybody cannot have equal knowledge as you. So you that is learning, the knowledge of direction, of course things will be easier for you. So instead of you to criticize, you can lecture them, update them, and that is why some of you watching me right now, you're learning more. Because if you have that mindset that every time the market take a sweep out the liquidity, it will reverse. What if the direction of the market is bearish that day? Okay, so that's why I said set stop still work. If you have a set stop here and the market is bearish, it will keep pushing you and then you will be on profit and you'll make money. So that is the concept of liquidity. Liquidity is just for price to sweep out a low like this or sweep out a high like this, okay? And another perspective of liquidity is that people who place this buy here, their stop loss are here. So everybody thought, because their set stop is here, the knowledge of liquidity is that price will come back, take out that stop loss, and then move to the upside. Please, everything you see online is not true, all right? There are some information, though it's possible for price, but the market cannot be doing that all the time, looking for stop loss, come here, take it, unless the direction of the market is not confirmed. If the direction of the market is confirmed, market maker don't have your time. They keep pushing this market upward. That's why we that still make money from trading, we still have our stop loss here and we still make money. So you are telling me that market will come back every time, take out my stop loss? No, 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 no. Unless you don't have, enough knowledge of the market, that is why you'll be a victim of, liquidity hunt, stop loss hunt and all that. We just talk about liquidity, right? Next is key zone, right? This key zone moment is the most powerful, okay? I'm going to do a special video regarding to this key zone moment. Now, but how do we make use of it? Because obviously you will see me use key zone every day in the market. As a matter of fact, I have an indicator right now that indicates this key zone moment. You can see the moment I want to know what time frame, you are seeing the indicator, very, very visible, audible right here. What is key zone moment or what are key zone moment? Key zone moment is the time I press my buy button or my sell button. There is no other time I will trade in the market outside this key zone moment. Out of all the ICT concept I know, this is the most powerful one. For me, it may not be the most powerful for others. There are some people, inducement is the most powerful. There are some people, liquidity is the most powerful. Why there are some other block favor gap. But let me tell you guys one secret, irrespective of the strategy, the techniques you are making use of, other block favor gap, inducement, for you to have efficiency, for you to trade with ease, all right? For you, mark that what I just said, for you to trade with ease, make sure before you press this buy button or sell button, let it be within this zone, okay? And that is why you must be a dynamic entry type of trader. Because if you, everything I've been explaining so far now, from the beginning of this video, on those entry techniques, you observe most of them are static style of entry because price need to come back to a level or a level and you are waiting. Okay, there are some time to come back to this other block outside this zone. All right. So sometimes it becomes very, very, confusing for some people. But you must be a dynamic entry type. But however, let me explain key zone moment. Key zone moment means a special moment in the market where there will be high volatility. I've explained the reason, everything behind this key zone moment in the past in one of my videos. Okay, one of the reasons is because of economic data report. One of the reasons is because of the opening time of the market. But however, this is the hit point of the market. That is why we prioritize it a lot. All right. Not that there's a special magic behind it, but this is the hit moment of the market. Now, the way we do it as an ICT student, first of all, make sure you are making use of New York time zone. Okay, you can see my time zone is UTC -4 New York. All right. Then you have to place for if you don't have this indicator, you do it manually every day. You put a vertical line on 2 a.m. or 1 a.m. All right. You can put it on 1 a.m. For me, I use 2 a.m. Okay. Then to 5 a.m. This will be the London key zone. New York key zone will be 7 a.m. to 10 a.m. Okay. Now this is how to identify all these key zones. But guess what? My goal in this video is to make things easier for you. Make sure before you press the buy button, I keep repeating it, or the sell button, it has to be inside this zone. If I wanted to trade on this day now, if I'm bullish on this day, this will be my entry. All right, either here or somewhere around here, and I need to go to lower time frame for that. Okay, and if I go to lower time frame, I'm still going to make use of everything I've been saying so far. All right, either I make use of other block or fair value gap or inducement or liquidity, but whatever I'm going to make use of, it must be inside this zone. That's why I said key zone is the most valuable information I use as an ICT student. I hope you guys know I went through ICT mentorship the year 2020. So we've learned a lot from this man, one of my, best mentor, right? Best mentor. But after him, I met someone else as well that simplified. That one trade only ICT, just like I am an ICT student. I teach people, make things easier for them as an ICT. So I met somebody that simplified because there's a lot of information here. There's a lot of information, and we only need, one thing in the market: press the buy button or press the sell button. So that's why you need someone to make things, put things together, which is what I'm doing in this video. All right, put things together and then make life easy. Our goal is just to make money, irrespective of whatever you do it. Just to press this buy button when the market is going up, press the sell button when the market is going down. Okay, I believe this video have helped most of you guys, make things easier. All right, more videos like this will still be created, uploaded in this channel. So if you are new here, subscribe, turn the notification button on. I'll see you guys next upload. Peace.